let me now bring on board Mr. Diwakar Gupta, Managing Director and CFO of India's largest bank, which is State Bank of India. Mr. Gupta, good morning. Thank you for joining us. Mr. Gupta, I've got a mixed opinion on your quarterly performance. The bulls are of the view that the worst is behind State Bank of India, but the bears are of the view that this is just the beginning and it's a while before the asset quality problems will bottom out.
Well, everybody is entitled to his opinion. The fact of the matter is that we have had asset quality challenges. Let me just put at rest doubts by saying that our actual slippages this quarter would have been 2,000 crores less had some of the CDRs, about 7-8 accounts, been approved in December. They have already been upgraded. So to that extent, our slippage was not, fresh slippages were not 8,000 crores, they were actually 6,000 crores. The addition was 2,000 crores to NPAs, and the gross NPA ratio was actually under 5, 4.95, rather than the optical 5.3 that people are seeing. So just to sum it up, I think we are behind the worst, definitely. Now, improvement comes with a lag because whatever is the run-up in sentiment needs some time to translate into numbers. But I do expect quarter 4 to be better, and I expect quarter 2 of next fiscal to be significantly better.
Mr. Gupta, margins as well have been under slight pressure. Post the base rate cut of 50 bips, what is the outlook on whole bank as well as domestic margins over the fourth quarter as well as FY14?
Well, we have a cumulative of 3.7 domestic net interest margin for the 9-month period ended December 2012. And I think we are holding at about 3.7 in January. So for the whole year as well, margin should not be under further pressure. The pressure that we are talking about is from a historic high, and it is very, very conscious. We cut rates in the early part of this fiscal by as much as up to 3 percentage points for some of the SME segments, and we decided to forego income of almost 1,800 crores in the whole year. There is also an optical element of 20,000 crores of corpus moved out on account of pensions, which was earlier adding to the NII, though it is bottom line neutral. So I think the NIM performance is okay, and you should not see further erosion in the current NIMs.
So when you say that you expect the current quarter to be better than the quarter gone by and the next fiscal will be certainly better than the current fiscal, quantify that for me.
It's very hard to put numbers given the fact that there are so many imponderables in the economy. The fact is that 80% of our current slippages are coming from the small SME and the mid-corporate sectors, and they are representative of the stress in the external economy. So I predicate my remarks to the hope that the economy itself will revive over the next 3 quarters. But if it does, then our credit cost should come down to less than a percentage point of total assets from the current 1.1, 1.2. And I think that would be a significant improvement.
Mr. Gupta, you had recently talked about, merging associate banks as well during FY14. Which ones would it be now that your financial, and rather how will your financials be impacted?
I don't think we have put out any statement saying that a merger is on the cards in 2014. In the end state, obviously the associates will merge with State Bank. But given our experience with Saurashtra and Indore, we feel that, the merger benefits and the additional costs sort of neutralize each other. So while that is the way forward, I don't think there is much urgency on that.
Which means I can safely assume that at least for next 2 years, your other subsidiaries will not be merged?
Well, I think FY14, I don't think any merger will happen. And then we are in a dynamic situation. I think we review everything year on year.
When will things genuinely turn the corner for you? And for a bank, they normally turn the corner when the economy picks up and when large loans, they turn from bad loans to good loans. When do you see that situation coming for State Bank of India? Because that's the time when the real delta or the real upside in your earnings will kick in.
As I just mentioned, out of our 53,000 crores of NPAs, almost 30,000, in fact more than 30,000 is in this mid-corporate and SME sector. I think much of this will come back once the economy revives. On the income side, fee income, which has been muted over the last two fiscals, will pick up as new projects come in and as the capex cycle turns once again. So I think really a lot of the revival of the banking industry itself, definitely for State Bank, is dependent on the revival of the economy. But I think there is every reason to hope that we are actually on the cusp of that revival. And over the next 3 quarters, we should see a strong revival back to trend growth, on a marginal basis of around 8%, which the country had seen in the past.
Mr. Gupta, what about restructured assets? What's the pipeline looking like? And when it comes to Suzlon, is all the restructuring done with?
Well, we have a restructured book today of about 35,000 crores. Of which 24,000 crores is standard and another 11,000 crores is slipped into NPA. So the NPA numbers obviously are treated along with other NPAs. We restrict ourselves to the 25,000 crores, which is standard. And this actually represents an 80% save rate on all the total restructuring that the bank has done. I think that's a good percentage. We have another 3,700 to be precise, about 4,000 crores in the pipeline, not including Suzlon. And this does not mean that we will have 3,700 crores of restructured assets in quarter 4, but over the next 3 or 4 quarters, that is the amount that we could look at as possible restructuring. Suzlon itself, I think, has its problems, which are very well known to the industry. They have cash flows in one part of the business, they are cash strapped in the other part of the business, and bankers and the company have to find a way of pooling the cash flows to get the company back to health.
Mr. Gupta, I'm getting a divided opinion on what lenders exactly want from Kingfisher Airlines, because every day we get a different comment, we get another comment the very next day. Since your skin is in the game, what is your status on KFA?
No, I think it's very clear. None of the lenders really are working to say that the airline should fold up. At the same time, any revival is dependent on the promoter's comfort and the promoter's equity. So I think all the lenders right now are saying that if there is no way forward, then we should enforce. But nothing has been done to actually move for enforcement as yet.
Are you ready?
I think patience is something which bankers are showing.
And
that's the right way forward.
So are you ready to take a haircut, and if yes, what is the quantum of haircut which lenders are ready to take on the KFA account?
I don't track the account day to day, but for the bank I can tell you that most of it is provided for. So anything that we get back is only a net plus to the bottom line. But that's only the financial aspect of it. The idea is not to say that therefore we don't care. We definitely do wish that the airline will come back to health.
So what is an acceptable term for you? I mean, if the promoters are ready to put in 1,000 crore, if they propose that, look, if they propose a haircut to the lenders, what could be an amicable solution? What could act as an icebreaker?
No, I don't think the numbers are being talked about in the sense of a haircut and a revival. The promoters really have to show the ability to infuse cash. And then all the parties concerned have to see whether inherent viability of operations exists. If these two questions are answered in yes, then a haircut, the quantum of it and the timing, etc. are all secondary. A way can be found around all that.
Are you getting a sense that the promoters have some kind of an intention to solve this problem?
No, I don't think that we should doubt the intent. Otherwise, the lenders would have already begun enforcement of recovery proceedings.
So you are in no hurry to sell any of the group company shares. The reason why I'm asking you a follow-up question on KFA is because that is something which is of immense market curiosity.
No, but you are right. I fully agree with you that this is a question really more of curiosity than fundamentals. I think the mid-corporate group is tracking it on a day-to-day basis. It would not be fair for me to make a specific comment on specific securities, timing or the necessary steps, Eventually we have to also respect some confidentiality and client privacy.
Okay, Mr. Gupta, good chatting with you and appreciate you taking the time out and joining us today on ET Now.